Hi, everyone. Welcome to the channel. Today, we're going to be looking at the company Lockheed Martin, ticker LMT. They're a major defense contractor with pivotal contracts like the F-35 fighter jet, with each jet costing in the range of $110 to $140 million each. This is one of two companies that I have paid above my valuation price, as I know it's a high quality business and an industry leader. Also, this year alone, they've returned $5 billion to shareholders and have recently increased a share repurchase authority to $13 billion. So, in this video, we'll look at their financials, perform a stock valuation, and at the end of the video, we'll do some computer modeling to look at the 52-week stock outlook. But since this is a company I own, we'll first look at my previous purchases and see how they performed so far. So let's jump right into it. Here are my purchases for Lockheed Martin, which were all made on November 3rd of 2021 at a price of basically $330. And this was after their Q3 earnings call, where management did lower their near-term guidance. And as a result, the stock did take quite a bit of a drop. And no, the price drop was still about 20-25% above my valuation. I believe Lockheed was a high quality business and perceived the market as a oversell reaction and a good opportunity to buy in. And we can see now, since that time period, the stock has basically gone up 35%. And then when you take into account dividends, it's up about 42%. Now, if I would have bought into the S&P on that day, I would be down about 10.5%. And when you take into account the dividends for the S&P, it actually comes down to -8. But overall, I'm up about 50% then when I compare my Lockheed purchase to the S&P. Down below is the actual purchases. So I bought it in through three different accounts, IRA and brokerage. And the total investment we can see here between the three comes out to about $24,000. And with that gain, it is $31,200. So now that we covered my purchases, we'll move on. We'll look at their financials, then get into their valuation. Looking at their financials, the first thing I'm going to point out is the far right-hand column here. This is the trailing 12 months, so taking into account Q1, Q2, and Q3 of 2023, and also Q4 of last year. And first we're going to look at is this net income and earnings per share. And we can see here for the two prior fiscal years of 21 and 22, it has been declining since 2020. And the stock did take an impact. And as I mentioned, this is the time period when I purchased back in November of 2021. But also going down here, book value, but really free cash flow and free cash flow per share. We can see that has been declining both last year and then for the free cash flow for the prior 12 months. So one area I do want them to pick up on, improving this free cash flow, getting back to a growing state. But it hasn't been all bad or all negative. We can see revenue pretty much increasing for the past 10 years, except back in 2022. However, we can see back on track for the trailing 12 months. Also, two big items I like looking at: dividends and shares. So, dividends, we can see that continually increased over the 10-year period, more than doubling, going from about $5.50 to $12. And also, their recent earnings, they said they're going to increase it again. So, another positive sign for the company. And then shares. I like seeing companies buying back shares as well. We can see back in 2014, just over 322 million shares. Now, currently, 250.6 million shares. So, buying back those share counts. And also, as I mentioned, they are going to increase their purchase buyback up to $13 million. So, that's another good sign. One other point I like looking at here, or data point, I should say, net profit margin. I really like seeing it over 10%. We can see they're typically in that 8 to 10% range, which is actually slightly higher for their industry. So that is a good sign. Though they did have two outlier years back in 2014, just below 7%, and then 2018, about 4%. But still, overall, good signs, especially this dividends increasing and shares decreasing. I really like to see that. I always think that's a positive sign for a company. But let's scroll down a little bit, look at some more data points on the graph. It's a little easier to see. On the graph, the first one we're going to look at is the white line. That's revenue per share. And we see right here, this has grown nicely, nice steadily incline, going up and to the right. That's what I want to see for these. So back in 2014, it was around $125 per share of revenue. And now it's in the range of, looks like 275, 270. So a nice growth there. Let me remove that and we'll look at the other ones, be a little easier to see once we remove revenue per share. All right, here we go. Now we have the others on the graph. Like I said, a little easier to see. So first, we'll look at book value. So we know book value. What we saw above hasn't been the most cleanest incline, a little choppy. We can see that here. A decline going into 2017, and then a nice run up, then a slight decline for last year, but trailing 12 months, it's showing a positive trend. Yeah, choppy, but still, it has moved up and to the right. Free cash flow in yellow. So I know we looked at it again a few moments ago. It was on a decline for the last year and the trailing 12 months, but still, over the last 10 years, it's up, coming from, looks like around $9 and currently hitting just over $20. So again, that's grown. Earnings per share, same thing. A little choppy, but it has grown. They had a rough patch here in 2017 and 2018 with a few of these declines. But again, earnings per share was just over $10 back in 2014, and now trending upwards towards $30. So kind of in the $27 range. So same thing, up and to the right, not as clean as I would like it, but still, it is moving in a positive direction. Then we can see dividends, a nice straight line going up and to the right. Net profit margin, since this is a percentage, we'll look on the right hand side. And as I mentioned, it's typically in the 8 to 10% range, and they had those two outlier years in 2014 and back in 2018 when it was around 4%. But overall, most of this is going up and to the right. Not as clean as I'd like to see, but still moving in the right direction and not too crazy with some of these variations. All right, now that we got the financials taken care of, let's move on and we'll look at their stock valuation. So I previously valued Lockheed back in February of this year, and at that time, intrinsic value was $317, and that was using a 5.5% growth rate for 10 years, then 3% thereafter. And I was using a pretty aggressive margin of safety, 65%, so bringing it down to $206. Now, based on the trailing 12 months, which takes into account the 3 quarters of 2023, we can see here the updated valuation. I'm using a 7.5% growth rate. That's basically their CAGR over the last 10 years and taking into account the trailing 12 months. So 7.5% over 10 years. And that's given a valuation of basically $407. Now, right now, I am still showing that aggressive margin of safety, 65%, bringing it down to about $265. But I probably don't want to be as aggressive, and I'm going to look at changing that to 75% to see how that changes the outcome. With that change, we can see it jumps up to $305. So currently, Lockheed's trading about in the $450 range, but actually, it wasn't too long ago where it was actually around 400 and slightly under 400. So unfortunately, I did not have this valuation updated, so I might have actually bought into it, even though it was a little higher. But still, as I mentioned, it's still a quality company, so I could see myself paying around this $400 range. But unfortunately, I did miss that opportunity. But if it does drop in the near future, I will consider buying some more shares. But also a few other data points I want to look at while we're here. We can see return on invested capital. They do a great job, over 20% and really averaging more in the 30% range over these time periods. So that's what I really like to see is this return on invested capital being high. Book value outside of year over year, which we have mentioned a few moments ago, these are pretty good results. 14% over the last 10 years, 5 years, 48, and 3 years, just under 20. It's just this most recent time period where kind of struggling a little bit. Earnings per share, not as well. I know we discussed that earnings per share have been a little mixed and choppy, similar to book value, but depending on the time period we take, it could have a positive or more of a negative outlook. Sales, we know they've been growing sales pretty much over the past 10 years, except for last year, which was slightly down. And then free cash flow. This is the one area I want them to improve. Free cash flow per share, especially if they're buying back shares. You think that this should be going up, so they do need to get that free cash flow improved. But overall, return on invested capital is the higher priority one out of these, followed by the book value growth rate. So with return on invested capital typically being in this 20 to 30% range, I'm very happy knowing that. Let's scroll down a little further and look at some other data points. So first, PE ratio, you can see 16.5. So kind of in that value opportunity, not necessarily a deep value, but still, it's not showing that it's too outrageous. And then long-term debt to free cash flow. Now, even though their free cash flow has been on the decline, it's still under 3, and that's what I want to see. So even with some improvement they need in that free cash flow, we can still see they can manage their debt. As we discussed, dividends, it was over 100%, so almost really 120%. Share uh, share decline, you can see just over 22%. And as I mentioned, they've allocated now $13 billion for share repurchases, so that should bring this down over the coming years even further. And then net profit margin, mentioned typically in the 8 to 10% range, and over the 10 years, just under 9, and for the prior 3 years, 9.5. So this is actually not too bad for their industry, but typically I like to see over 10. But since it is slightly higher than the average for the industry, I still look at this as positive. So overall, yeah, they do have some choppy data points, but I do like everything overall for Lockheed Martin. And again, it's a high quality company, a leader in their industry. And given everything that's going on in the world today, you have to believe the US and our allies will continue to invest in defense to maintain superiority against our adversaries. So now let's move on to the computer modeling and forecast the 52-week stock movement. In the computer modeling software, I already ran the analysis using two methods. The first is the M5 rule shown here. And this line right here just shows the most recent Monday, October 30th. And the far right hand column is the stock price for Lockheed, which closed at 452.38. Column right next to it is the S&P 500 ETF, closing at 422.66. Other columns is other various data points being used with the analysis here. And I did copy all the results for both methods and pasted it into Excel. It's a little easier to see there, but we're going to take a quick look at these results in the far right-hand column as I scroll down. And what it's showing is kind of flat for a couple of weeks, but then the stock price dropping down to the 430 range out in the beginning of next year, but then slowly climbing back up, eventually hitting 470s in March, dropping back into the 460s in May, but then climbing back up again, hitting the 480s, and eventually closing out the 52 weeks at 488.38. Now let's jump over. We'll look at the random forest method, which usually is a little more bearish with its results. And same thing here for this October 30th, stock price closing at 452.38. And looking at the initial results for the next couple of months forecast, we can see it's showing a decline in the stock price, actually hitting 400 and just below 400, like we've seen about a month or two ago. But then slowly ticking back up, getting back up into the 430 range, eventually 440, 450 out in April of next year, then dipping down again, hitting the 430s and even into the 420s for a short period of time, but ticking back up, getting into the 450s and closing out the 52 weeks at 446.24. But as I said, all this results are copied in Excel, so let's jump over there. A lot easier to see on the graph. So we have the data in Excel here, and I point out the vertical red line that just represents this previous Monday, October 30th, and everything to the left in blue is the historical stock price, and everything to the right would be the forecasted. And just looking at a little history on Lockheed Martin, we can see back in 2009 through midway 2013, stock was trading just under $100, but then it had this nice run up going into 2018, hitting over $300, then a slight decline, but then shooting back up again and hitting over $400 right before COVID. And then staying in that $300 to $400 range for about almost 2 years. And then out here, November of 2021, that's when I bought in at $330. And then it jumped up, going over 400, getting in that 450 range. And there was a slight decline, falling just below 400, but then jumping up in that high 400, getting close to $500 range. And then, as I mentioned, it did drop back in August, September of this year, hitting like around $400, but then just jump back up again, and where we are now at 450. So I'm going to jump to another tab so we can look at all the results on the forecasting. It will be a little easier to see. Looking at the M5 rule forecast first, to the right of the vertical red line, it's showing this slight uptick, but then a drop off, but a strong recovery right after, and actually closing out the 52 weeks at around $489, which would be about a 8% return from where we were on Monday the 30th at that $450 range. So not quite bullish, but still a positive return out in 52 weeks. So let's jump over and look at Random Forest next. Random Forest, so we can see it's showing a slight decline and then a big drop off, and actually getting down to 400 or just below $400, but then recovering and closing out the 52 weeks slightly lower at $445, $46, which would be about a negative 1.5% return over the next 52 weeks. And let's just look at the average as well. So averaging the M5 rule in Random Forest, we see here to the right of that vertical red line, kind of flat for a couple months, but then the drop off in early part of next year, but recovering just like the M5 rule, but not quite as a strong recovery, and closing out the 52 weeks at around $467, which would still be a gain, but only of 3.5% or so. To recap, the M5 rule showing a positive outlook for Lockheed Martin, closing out the next 52 weeks in that high $480 range, while Random Forest slightly negative, closing out October 2024 at around $445. Now, considering everything that's happening in the world today, I got to believe that there will be more defense spending, not just for the US, but also for our allies. But at the current stock price in that $450 range, I'm just at a hold. And if the outlook that Random Forest had with that decline out in beginning of 2024, dropping below $400, at that time, if that does happen, I will consider buying back into the stock. Though that does not provide a high margin of safety, as we saw when we performed the valuation. So I hope you enjoyed the video and got some useful information out of it. If so, consider subscribing, and hopefully I'll see you next time. Thanks.